Hello, great people. Today, I will analyze USD JPY, Euro New Zealand dollar, and US 500 and show you how you can easily make more than 1,000 pips in profit in your trade in this period. We have a project on this channel. We are going to take 20 swing trades together on this channel to show you how you can manage your risks and grow your trading account. In this exercise, the following rules will apply. We will be analyzing our risks based on $1,000 trading account. So if you have more than $1,000 in your trading account, you should do your calculation based on $1,000, and then we will make sure that we reach nothing more than 2% of our account for every trade we take, and we will ensure to make a return of 4 to 6% for every profit, every trade that goes in our favor. Okay, and then other rule is that we will ensure that we take the entire 20 trades without missing anyone. At the end of the 20 trades, that is the only time we can evaluate all the trades we have taken and know how much we have made in profit. So these rules are very important. It will help you to be committed doing the right thing. So this exercise, it will help you to develop trade discipline when you are trading. So many persons blow their trading account and they lose money in trading because they lack discipline to follow the rules they set for themselves. And another thing you will also do is that it will help you to control your emotions when trading. A lot of people trade using emotions, and this is not good. So this exercise will help you to control your trading emotion, because there is going to be a period of losing streaks when you will take the first trade and it will be a loser. You take the next trade and it will be a loser. You keep on taking up to 5 trades in a row and it will be a loser. How do you react in that kind of situation? And then the final thing you will gain from this exercise is that it will help you to set expectations right. So many people that are trading Forex do not have the right expectation. You know, they feel like you can use $1,000 and blow and become a billionaire overnight. But this exercise will show you what is possible in the market when you are trading with low risk and you have full control of your emotion. Okay, so having said that, there are 4 tools that we will use in this exercise. The first thing is that we'll be using Trading View for our analysis. Then we will use Excel to calculate our risks, that is our take profit and our stop loss target. So everything we do in these 20 trades, we'll make sure that we document them using Google Sheet, and this is very important for us to be able to look back and evaluate our result. Then you can now execute your trade using either MetaTrader 4 or MetaTrader 5, whichever one that you have. So for you to follow up, there are 2 things you need to do. You need to open a demo account. You should use a demo account for this first exercise, because this is the first time I'm sharing this on my channel. So I don't want you to go and be confused. So use a demo account for this exercise. Open it with any broker of your choice. If you already have a trading account, good. And then what I want you to also do is subscribe to the channel and hit the notification button, because I'll be dropping the next rate as the time goes on, so that you will not miss out. It will not be good that I drop a signal and then you come very late and pick the trade when it has already played out, and then it will not come out the way you want. So if you have done these things and you agree to the terms, let's go straight to the system and begin our analysis, starting with USD JPY. So let's start with US dollar Japanese yen on our screen right here. So it's opening. All right, so this is USD JPY. Let's start our analysis from the weekly time frame. Okay, so this is the weekly time frame. Let me remove all the drawings, all the things that I placed on this. What you will see here is that this currency pair has been in an uptrend, as you can see here. It touched here once, touched here on the weekly, and touched here, and now it is moving. Right, so that is what one thing you should you can notice from our analysis on the weekly time frame. Another thing is that it got to a resistant level. This resistant level there, which we have marked with that ray. So we need to take note of that point as we are going to the lower time frame to continue our analysis. So if you come to the daily time frame, what do you see? Let's see if the daily time frame actually aligns to what we saw there. So if you come to the daily time frame, this is what we have there. Scroll down, it touched this point. There are many touches showing you that this is a very solid trend line. Then the market traded to this high and came back. Right, for now, after it touched here, it has not been able to go back to that all-time high. So that is something we need to note in this thing where we're doing. We need to note the fact that it is going to that all-time high. So come down to the 4-hour time frame. What do we see on the the 4-hour time frame. So when we're doing this analysis, we began the analysis from weekly time frame, then came down to the daily, where the market is going finally. So if you come to the 4-hour time frame, you can see here that we have the immediate trend, which is very important, because when you're trading, the immediate trend is where you execute your trade. We already know where our target should be overall. So on the 4-hour time frame, you can see here that there is an uptrend that is there. So if you look at it, you started this from here, went up, came down, went up, came down, and then it has come to this point. So we are expecting it to drop somewhere here, then we can place that trade. So how do we do that? Let me delete this out of view so that it will be clearer for us, and it will tell us exactly where we should be aiming to enter this trade. So if you take a Fibonacci retracement from this swing low to that swing high, I'm expecting this market to drop to this level, to the 61.8% level, right? So we will be taking a buy from that point, and then we will buy from that point on. So now that we have finished doing the analysis on the USD JPY, how do we calculate our risks, our stop loss, and our take profit? Some other persons, they go to the chart and they just click somewhere, this is stop loss. But for me, the method I trade, I use volatility to calculate my stop loss and take profit, and this is how we do it. You come to investing.com and search for that currency pair that you are trading, USD JPY. So if you come to USD JPY, you scroll down, you see this area, they wrote historical data. Let's click there and we'll download the history. For the past weeks, it has been calculated. So we change the time frame to the weekly time frame. I have a video on my channel that explains how to calculate stop loss and take profit using volatility. It is already on the channel, so you can watch that video. So here we are. So you can now click here, download the data for the past at least for the past 13 weeks of data. If you download this data here, so you take out all this data, at least 13 weeks of data, take it to your calculator and drop it there. If you paste it, automatically it has calculated the volatility, how much USD JPY moves in a week. For the past 12 weeks, it has been moving on average of 1.25%. So we're going to use this 1.25% to set our stop loss and our take profit. In this way, our stop loss and take profit cannot be hit easily, because sometimes all those market manipulations will come, hit your stop loss, and then it will continue in the favor. But we don't want to do that. So we'll now go to our workbook and look for USD JPY that we were analyzing. So this is USD JPY. Our entry point on USD JPY is where we're taking a buy at 146.344. 146.344. So if you come here, 146.344, automatically, if we do that, you see that it has calculated our stop loss and our take profit. Our stop loss is 144.51. 144.51. Okay, then our take profit is 151.83. 151.83. So let's go back. Take profit target 151.83. Let's edit it to 151.83. So that is our take profit. Then if you take a long position and place it here, it will help us to calculate the lot size. Now in my own trading, the stop loss and the take profit depends on the volatility of the market. You do not just go and set stop loss and take profit anyhow. It depends on the volatility of the market, but your lot size depends on the amount of money you are using to trade. In this case, we have only $1,000 in our trading account, so we'll be calculating our lot size based on that $1,000. So let's take it to that place. So this is our take profit target and this is our stop loss target. So it's giving us a risk reward ratio of 3:1. So if you take that, it is this is an extension on my Chrome browser that helps me to calculate the lot size. So if you look at that, based on the risk of 2%, it is telling us to use 0.016 for as our lot size. But since there is no 0.016 and we do not want to take more than 2% risk, we'll be taking 0.01 lot on this trade. So that is that. So your lot size is 0.01, your stop loss is there. So this is the signal that we called here. Entry point 146.344, stop loss 144.513, soft target, they will take profit 151.834. Now another thing is that when the trade start playing, you will know how to manage your trade. And remember, this is only for the purpose of education and for our exercise, nothing more. This is not a call for you to take this as an investment advice. All right, here we have the chart of Euro New Zealand dollar. dollar. Okay, so we start our analysis from the weekly time frame. If you look at the weekly time frame, what I see on this trade, you can see that this trade was in an uptrend, clearly an uptrend. But at this point, there was a breakout, and now it has come to retest the trend line, the weekly trend line. So that is very important. This information will help us in further analysis. If we come down to the daily time frame, what you will see on the daily time frame is that, let's see if the daily time frame follows what we have already seen there. So on the daily time frame, you can see that it's still approaching that trend line. Let's see what goes on there. Okay, it has come to test that our weekly trend line, and this is very important. As you can see, this area. All right, so if you look at that area, target to take a sell position. So let's go to the daily time frame and see if we will see opportunities to take that trade. So if you come to the daily time frame, you can see multiple rejections. There are multiple rejections telling you that the market is about to start falling, and this agrees to what we had on the weekly time frame. So this looks good to me. If the 4 hour time frame is there, let's go to 1 hour time frame and see if there is clarity. All right, so if you were trading on the 1 hour time frame, you can now see multiple rejections. There is a consolidation here. The market has been consolidating within a very tight range, so there is a point here. There are multiple rejections here. So overall, we are looking at dropping. So there are two ways we can enter this trade. If it depends on your risk appetite. If you are an aggressive trader, you can already enter the trade. Some people have already entered, are supposed to have entered already when it got to this point. But if you are not aggressive, let me show you a better way for you to wait for this trade. All right, so we can do this. We can wait for this trade to break this level. Okay, so what we will be expecting here, we'll wait for the trade to break out, and then by the time it comes back, then we can enter and continue. So I think this is a good way for you to enter this trade. So another way we can enter this trade, we can also set a pending order around this level. Okay, so what I will do right here, because we need to take a trade as we have analyzed, we will set a pending order, a sell limit. Okay, so after setting the pending order, we'll come back later. We'll be managing this trade. If it continues the way I've pointed, we'll take that later. But right now, let's take a pending order at this level. So use your ATR calculator to do the same thing I did in USD JPY. If you use your ATR calculator, it will tell you where your stop loss and take profit target should be. US 500. It has broken the all-time high here, and that has signaled to us that we are in a long bull run. It's very important. We are in a very long bull run. All right, as you can see, we've taken out an all-time high on US 500. Wow, this is powerful. So what you can do on the weekly time frame, you can see that we have clearly breached that resistance level, telling you that we are looking at something mighty on this. So if you come to the daily time frame, let's go to the daily time frame and understand what is going on properly. So if you come to the daily time frame, this is what we see. This is the all-time high we saw, and you can see here clearly. Let me zoom out this area. If you zoom out this area, you can see that we broke through and we're in a bull run. All right, so that is very clear to us. So in other words, we don't need to think much. This thing is a buy for USD US 500. So if you come to the 4 hour time frame, we only need to know when to be able to enter this trade at the right time and make money and not stand the chance of losing, because this trade is highly volatile. So we need to be careful and look at this thing very well, right? So if you come to the 4 hour time frame, this is what I see, and this is what I will be expecting. If you take your Fibonacci retracement, you see that this thing came retraced to this level and started pushing up. So the next thing I will be expecting, if the Fibonacci tool will work, I will be waiting for a correction. Let it run to wherever it is going, and then we'll calculate, wait for a correction. We'll wait for it from this level, we'll measure and wait for a correction to maybe around 61.8 fib level or 50% fib level. If that happens and we see bullish engulfing candle or a morning star or a Twizzlers bottom at these fib levels, that is a good time for us to enter the trade. But at this moment, this is not the right place for us. Let's wait for a retracement or a correction. So once that correction comes, you should calculate your distance. You can use the calculator that I have provided. If you measure the number of pips that you should be seeing from here, you take your ruler and you measure somewhere here to there. It's more than 900 pips. Okay, if you look at the USD JPY trade, let's calculate the amount of pips that we stand to make there. From here, you will now see that from here down to this point, it's around 500 and something pips. And then if you look at the Euro New Zealand dollar trades, the Euro New Zealand dollar trades actually gives us around 435 pips. Okay, so if you combine 500 plus 400 and something plus 900 and something, is far more than than the 1,000 pips that we saw at the end of the day. So these are the trades that I'll be taking this period along with other ones. But the focus is make sure that you calculate your risk using nothing more than 2% of your trading account. You can see that in trading, you need a larger account to make more money. A small trading account like $1,000 will not make you more. All right. So this is what we have seen today. All right. So if you have any currency pair you want us to analyze, drop it on the comment and follow up the program. For you to get update on how we manage all these trades that we have taken, follow us on the Wealth WhatsApp channel. You can click the link in my bio to join that community. Thank you and God bless you. See you in the next